There's a silent war in trading. Not on the charts, but in the mind. Every trader wants the edge, the secret, the formula that separates success from failure. But what if that edge isn't technical at all? What if it's psychological? Because the truth is, winners and losers don't trade different setups. They trade from different states of mind. The winners approach every decision with calm precision, the losers with emotional chaos. And the difference between the two is a simple but powerful ritual called the pre-trade audit. It's the psychological checkpoint that top traders perform before every entry, a mental filter that clears noise, resets emotion, and locks in clarity. Before the winners click or sell, they run this audit, they scan their thoughts, question their motives, and stabilize their emotions. They know that the market doesn't just test your analysis, it tests your emotional control. The losers, on the other hand, skip the audit. They enter impulsively, chasing setups out of fear, greed, boredom, or frustration. They think they're trading price, but they're really trading emotion. That's why two traders can look at the same chart and walk away with opposite results. One executes with clarity, the other reacts from chaos. The pre-trade audit is what creates that gap. It's the invisible wall between discipline and destruction. The moment you stop and check your state before entering, you shift from reactive to deliberate, from emotional to logical. You remind yourself that the market isn't your enemy. Your own unexamined emotion is. The psychological edge begins when you can pause, breathe, and see the truth of your mental state. Are you trading because the setup fits your plan, or because your ego wants redemption? Are you at peace with the risk, or secretly praying the market goes your way? Are you calm enough to execute, or restless to prove something? The audit exposes all of it. It's not about being perfect, it's about being conscious. Because awareness is the true edge in trading. Once you see your emotion, it loses its control over you. That's why the professionals look so effortless. It's not that they don't feel fear or greed, it's that they spot it before it drives their hand. The audit acts like a mental firewall, blocking impulses before they burn your account. Every top trader has a version of it. Some write it down, some visualize it, some just pause in silence before every entry. But all of them do it because they know clarity is currency. When you skip it, you trade noise. When you apply it, you trade truth. The losers act fast to feel in control, the winners slow down to stay in control. The difference looks small, but it changes everything. Because trading isn't about predicting the market. It's about managing yourself inside it. Every decision, every click, every reaction is a reflection of your state in that moment. And if your state is unstable, no strategy will save you. The pre-trade audit keeps that from happening. It's your mirror before the market. Your way of asking, am I mentally clean enough to risk capital right now? The answer to that one question determines your future more than any technical pattern ever will. Winners use it to stay consistent. Losers ignore it and call it luck. But luck has nothing to do with it. It's discipline disguised as calm. It's awareness disguised as confidence. It's preparation disguised as intuition. That's the psychological edge, not trading harder, but thinking clearer. Not reacting faster, but pausing smarter. Every trader can learn strategy, but only a few learn self-mastery. And that's what this audit trains. Mastery of the self before mastery of the market. Because once you can control your pre-trade mind, you control everything that follows. The candles, the charts, the outcomes. They stop being emotional triggers and start becoming simple data. You stop hoping and start executing. You stop chasing and start choosing. You stop losing to your own mind. That's why the pre-trade audit isn't just a tool, it's a transformation. The line between winners and losers isn't drawn on the chart, it's drawn in the moment you decide how to think. Winners audit before they act. Losers act before they think. That's the difference. That's the truth. And that's your edge, invisible to everyone else, but powerful enough to change everything. Because in trading, your biggest opponent will never be the market. It will always be the mind you bring to it. Master that, and you'll never need luck again. Most traders believe they're battling the market, but the truth is far quieter and far deadlier. They're battling themselves. Charts, indicators, patterns. Those are just reflections. The real volatility isn't on the screen, it's inside the mind. The invisible battle begins long before the first trade is placed. It starts in the space between confidence and doubt, between patience and impulse. Most traders don't lose because they lack knowledge. They lose because they can't manage the chaos within. When fear whispers, even a perfect setup looks dangerous. When greed takes over, a risky position suddenly feels like destiny. The screen becomes a mirror, and what it reflects back is emotion disguised as logic. Fear turns opportunity into threat. Greed turns logic into illusion. And when emotion dictates perception, reality bends to fit the feeling. A red candle feels like betrayal, a green one feels like hope. The trader forgets to see what's there and starts seeing what they want. That's when discipline dissolves. Picture this: two traders, same chart, same price action, same potential. The first one is calm, grounded, centered. He breathes before acting. He observes, not to predict, but to understand. His mind is still enough to see clearly. The second trader is restless, chasing validation from every tick. Each candle feels personal. He enters early, exits late, and justifies it all as instinct. But what he calls instinct is just emotion wearing confidence as a mask. The difference between them isn't skill, it's state. One reacts from noise, the other responds from clarity. And in trading, that single difference decides everything. Because the market doesn't reward intelligence, it rewards composure. It punishes haste, ego, and emotion with brutal precision. You can't trade well if your internal state is unstable. You can't see clearly if your mind is fogged with hope or fear. Every trader faces the same external chart, but they bring different internal conditions to it. The emotional trader tries to fix his results without ever fixing his state. He studies setups, strategies, entries, exits, but never examines the thoughts behind them. He doesn't realize that his losses aren't just bad trades, they're feedback loops from his unexamined mind. He's not losing to the market. He's losing to himself. Because before you ever face the market, you must face yourself. Before you measure risk on a chart, you must measure risk inside your own psychology. Are you trading to execute a plan, or to escape a feeling? Are you looking for opportunity, or for redemption? Are you ready to follow your edge, or are you secretly hoping for luck? These are the real risk parameters, and they're invisible on any platform. That's why the best traders aren't just technically sharp. They're emotionally fluent. They understand their own triggers, their own tilt points, their own weaknesses. They know when they're trading from strength and when they're drifting into emotion. They've built a mental firewall between thought and impulse. Because in trading, impulse is the silent assassin. It feels fast, it feels powerful, but it's pure destruction. And unless you slow down enough to recognize it, it runs your account for you. Every losing streak begins not with a bad trade, but with a blind state. A moment when you enter without awareness of your own condition. That's where the concept of the pre-trade audit comes in. A ritual designed not for the market, but for the mind. It's not about asking, is this setup good? It's about asking, am I good right now? Am I neutral, disciplined, balanced enough to engage the market as it is, not as I want it to be? It's a psychological system for checking your internal risk conditions before you ever place a trade. Because if your mental state is tilted, even the best setup becomes dangerous. But if your mind is stable, even uncertainty becomes manageable. The pre-trade audit is the trader's version of pre-flight inspection. You don't take off until you know your systems are green. It forces you to pause, to breathe, to observe your own emotional landscape before you expose your capital to risk. It's the difference between a trader who reacts to the market and one who responds to it, between a gambler and a professional, between chaos and control. The invisible battle doesn't end. It only gets quieter when you learn to listen. The market will always be unpredictable, but your mind doesn't have to be. And that's the shift every great trader makes, from fighting the chart to mastering the self. Once you win that inner battle, the outer one becomes simple data, not danger. You stop needing to be right. You stop fearing loss. You start operating from truth, not emotion. And that's when the market stops feeling like an opponent and starts feeling like a mirror. One that rewards the trader who can stay still in the storm. Because in the end, trading isn't about what you see on the screen. It's about what you can see within yourself before the trade begins. Every trade begins long before you ever touch the keyboard. Before the chart, before the plan, before the signal. There's a state, a psychological fingerprint that defines how you'll see the market, how you'll react to it, and how you'll interpret every tick that follows. Most traders never notice it, but they carry their day into their trades. They carry arguments, fatigue, distractions, excitement, even tiny emotional ripples they think don't matter. But they do. The mind doesn't reset just because the market opens. If you bring tension from life into trading, you're already one step out of balance. A small frustration from the morning becomes impatience on the chart. A bit of boredom becomes forced entries. A hint of excitement becomes overconfidence. The invisible emotions that trail behind you shape how you perceive opportunity and risk. The problem isn't the market. It's the emotional residue you didn't clear before sitting down to trade. You think you're analyzing price, but what you're really doing is interpreting it through your current mood. The mind under stress sees danger everywhere. The mind under euphoria sees opportunity everywhere. Both are blind. That's why so many traders make decisions that make no sense in hindsight. They weren't trading strategy, they were trading state. Every decision you make in the market is filtered through your internal condition at that moment. You can have the best strategy in the world, but if your emotional baseline is off, that edge turns toxic. Because emotion doesn't just influence perception, it distorts it. When you're frustrated, your brain narrows its focus. You stop seeing context. You fixate on the one setup that might save your day. When you're excited, you overestimate probabilities. You see what you want to see, not what's there. The irony is that both emotions feel rational in real time. That's why the first step of the pre-trade audit is so powerful. Step 1: the emotional baseline check. It's brutally simple, but it changes everything. You ask yourself one question. What emotional state am I in right now? That's it, one line. But it cuts straight to the core of self-awareness. Because most traders don't lose due to bad setups. They lose because they never checked who was trading. Was it the calm, focused version of you, or the impatient, emotional one? You can't manage what you don't see, and until you bring your emotional state into awareness, it runs the show from behind the curtain. This first question forces you to pause and turn the spotlight inward. It breaks the illusion that you're neutral when you're not. But let's be real. Awareness doesn't happen automatically. You can't just decide to be calm. You have to train it like a muscle. That's why elite traders treat emotional control like part of their strategy, not an afterthought. They know that if their internal state is off, their risk profile is off too. A trader who's anxious risks too little and misses opportunity. A trader who's euphoric risks too much and blows up. The market amplifies whatever emotional energy you bring to it. That's why every top performer has rituals to check and reset their state before they click buy or sell. Here's what they do. The first is the breathing reset, a simple but powerful tool to recalibrate your nervous system. Before every session, they stop for 1 minute, eyes closed, deep, slow breaths in through the nose, out through the mouth. It's not about relaxation, it's about regulation. Each breath brings awareness back to the present moment. The tension in your chest, it loosens. The racing thoughts, they slow. The act of breathing creates a gap between emotion and action, and in that gap, clarity returns. Because trading is about precision, and precision cannot exist in chaos. Then comes the emotional scan. It's quick, maybe 3 minutes, but it's the most honest mirror you'll ever use. Sit still. Ask yourself, what am I feeling right now? Don't analyze it, don't justify it, just name it: tired, anxious, overconfident, hopeful. Whatever comes up, acknowledge it. The goal isn't to eliminate emotion, it's to expose it. Because the moment you name it, it loses its unconscious control. You stop being in the emotion and start being aware of it. That tiny shift from reaction to observation is the essence of trading psychology. When you observe your emotion, you create space for discipline. You can decide how to respond instead of letting emotion decide for you. And then there's the journal check-in. It's not about writing novels, just a quick record of your pre-trade state. A few lines: slept 5 hours, feeling distracted, slightly excited after yesterday's win. That one note gives you context later when reviewing your trades. You start to see the patterns, the link between emotional states and outcomes. You realize that your biggest losses didn't come from bad analysis, but from trading tired, frustrated, or overconfident. You begin to respect the fact that emotion is data too, not something to ignore but something to monitor. Let me tell you a story. There's a prop trader named Daniel who starts every session the same way. Before he even looks at the charts, he sits in silence for 5 minutes. No screens, no alerts, just stillness. He asks himself out loud, what emotional state am I in right now? Some days the answer is easy, calm, focused, ready. Other days it's messy, irritated, distracted, uneasy. On those days, he doesn't trade until he feels reset. Sometimes it takes 10 minutes, sometimes an hour. Sometimes he walks away completely. And that's why he's consistent. Because he knows that entering the market from emotional imbalance is like flying a plane through fog without instruments. You might survive, but it's only luck. Another example, Maria, a futures trader, journals before every session. She writes one sentence at the top of her prep page: I am emotionally neutral. Then she challenges herself, is that true? If not, she writes what's real. Maybe she's still thinking about yesterday's loss or stressed from her personal life. Naming it keeps her honest. It's her way of saying, I see you. Emotion. But you don't get to drive. That honesty is what separates pros from amateurs. Most traders lie to themselves before they lie to the market. They say they're fine when they're not. They chase trades to fix a feeling they refuse to admit. But the pre-trade audit doesn't allow denial. It demands awareness first, action second. Because here's the truth. Your emotional baseline is your hidden P&L. It decides whether you're trading with clarity or confusion. If your state is centered, your mind can execute your plan. If it's distorted, your plan collapses under pressure. The emotional baseline check is about catching distortion before it leaks into behavior. It's not a soft skill, it's survival. Every impulsive entry, every revenge trade, every hesitation that costs you a winner. It all starts with a compromised state. That's why professional traders spend more time managing their psychology than their entries. They know that edge means nothing if your mind isn't steady enough to use it. And the beauty of this first step is that it compounds. The more you practice it, the faster your awareness sharpens. You start noticing emotional shifts in real time. The tension in your chest when a trade moves against you, the excitement when one moves in your favor. Instead of reacting, you recognize. Instead of forcing, you flow. You become a watcher, not a reactor. That's when trading transforms from chaos to clarity. The emotional baseline check doesn't make you emotionless. It makes you conscious. And consciousness is the ultimate edge. Because once you see your own state clearly, no market movement can control you. You stop fighting your feelings and start managing them like risk. You stop entering trades to escape emotion and start entering because it aligns with your plan. The question, what emotional state am I in right now, might sound simple, but it's the foundation of psychological mastery. It turns the invisible into visible, the unconscious into deliberate. It's the first checkpoint between reaction and awareness. And every professional trader knows that's where victory begins. So before you load your charts tomorrow, before you analyze a single pattern, pause, close your eyes, breathe, ask that one question, what emotional state am I in right now? Don't rush the answer, feel it, name it, own it. Because that question is your first line of defense, your first layer of discipline, your first true audit. And if you can do that, if you can face yourself before you face the market, you've already separated yourself from 90% of traders who never will. Because trading mastery doesn't begin when you click buy. It begins when you become aware of the mind that's about to click it. Expectation, the invisible poison that corrodes discipline from the inside out. Every trader has felt it, but few recognize it for what it is. It starts subtle. A quiet thought before a trade, this one should work. Or after a loss, the next one will get it back. Expectations sound harmless, but in the market they're lethal. Because the moment you expect, you stop observing. You stop following the process and start chasing an outcome that exists only in your mind. Expectation is the seed of attachment, and attachment is the root of all emotional trading. You expect to win, so you hold too long. You expect to recover, so you double down. You expect the market to behave, and when it doesn't, you fall apart. Expectation creates tension, tension breeds reaction, and reaction destroys consistency. The truth is, the market doesn't owe you anything. It doesn't know you exist. It doesn't care that you lost yesterday or that you deserve a win today. The market is neutral. Only your mind adds meaning, and that meaning is what blinds you. Every losing streak begins with a single expectation, that the next trade should unfold a certain way. That belief becomes pressure. Pressure becomes impatience. Impatience becomes deviation. You stop executing the plan and start executing emotion. The irony is that the moment you expect to win is the exact moment you lose control. Because expectation turns trading from execution into emotional negotiation. It makes you bargain with the market. Hold a little longer, risk a little more, ignore the rule just this once. But every bargain with emotion has the same ending, regret. That's why step 2 of the pre-trade audit is called the expectation filter. It's the mental firewall that separates clarity from chaos. Before every trade, you ask yourself one simple but profound question. Am I expecting or am I executing? It's not a trick question. It's a mirror. If you're expecting, you're attached to outcome. If you're executing, you're aligned with process. Expectation says, this trade will work. Execution says, I will follow my rules. Expectation demands reward. Execution demands discipline. One feeds emotion. The other feeds mastery. Most traders blur that line without realizing it. They convince themselves they're following the plan, but underneath, there's still that emotional whisper. This one has to work. They're not trading anymore. They're gambling under the disguise of strategy. The expectation filter brings that whisper into awareness. It forces you to identify whether you're entering a trade to execute your system or to satisfy an emotional need. Because the moment you attach to an outcome, you distort the process that was designed to get you there. You overmanage winners, you fight losers, you sabotage your own edge. It's not the market breaking you. It's your attachment to what you want the market to do. So how do you clear that attachment? You can't just tell yourself, don't expect. The human mind always projects into the future. The key is to see it and let it go. That's where visualization comes in, a technique used by elite traders and athletes alike. Before you trade, close your eyes for 30 seconds and visualize the entire process, not the profit. See yourself following your rules perfectly. See the trade play out. Maybe it wins, maybe it loses. But you remain calm in both outcomes. Feel that neutrality. Feel how light it is when you're not clinging to the result. That's the emotional posture of a professional. Relaxed intensity, detached focus. You're in the game, but not consumed by it. Pair that with what we call pre-trade clarity breathing. It's simple: inhale slowly through the nose for 4 counts, hold for 2, exhale for 6. As you breathe out, imagine releasing every expectation. The hope for profit, the fear of loss, the pressure to perform. You're not eliminating care, you're eliminating attachment. You're reminding your nervous system that your job is not to control the market, it's to control yourself. This breathing resets the body into a state of neutrality where logic can re-enter. Because emotion narrows perspective, but calm expands it. From that calmness, clarity becomes automatic. When you combine the expectation filter with this breathing and visualization, something powerful happens. You begin to trade from truth, not illusion. You stop expecting the market to conform to you and start conforming yourself to reality. You realize that your edge doesn't come from prediction, it comes from precision. You execute because it's the right thing to do, not because you want a particular outcome, and that detachment changes everything. Your stops become easier to respect, your targets become just data points, not lifelines. You stop overreacting to every tick because you no longer need the market to validate you. There's a story about a trader named Sean who used to blow up after every winning streak. He didn't know why. His strategy worked until he started expecting it to keep working. After a series of big wins, his mind subtly shifted from execution to expectation. Every setup looked like the one. He stopped managing risk with humility. He believed he couldn't lose. And the market punished that belief ruthlessly. It took him 3 blown accounts to realize that expectation, not setup, was the enemy. Now, before every trade, he whispers the same line: I don't need this trade to work. I just need to work my process. That one sentence saved his career. Because once you release the need for a specific outcome, you trade from freedom instead of fear. Expectation is mental leverage. It amplifies emotion. Remove it and your decisions stabilize. That's why professionals trade small, think slow, and detach fast. They understand that control doesn't come from being right, it comes from being consistent. And consistency is born from emotional neutrality. Every losing streak, every spiral of revenge trading, every tilt session, it all starts with one small expectation that went unnoticed. Catch it early, filter it out, and you stop the entire chain reaction before it begins. The expectation filter isn't about pessimism, it's about realism. You don't assume the trade will fail, you accept that it might. You don't trade to prove anything, you trade to execute something. You don't need the outcome, you need alignment with process. Because in the long run, the process is what prints profit, not prediction. Every great trader eventually learns this: when you surrender expectation, you gain control. When you stop needing the market to behave, you finally start behaving like a professional. So before your next trade, pause and ask the question that separates the disciplined from the desperate. Am I expecting, or am I executing? Say it out loud if you have to. Feel the difference in your body. Expectation feels tight, anxious, urgent. Execution feels calm, deliberate, grounded. Choose the latter every time. Breathe, visualize neutrality. Let go of the outcome and trust your preparation. Because the moment you stop expecting, you stop forcing. And when you stop forcing, your edge finally has space to work. Every losing streak begins with expectation. Every breakthrough begins when you release it. In trading, most people think risk management means position sizing or stop loss placement. But the truth runs deeper. The real battlefield is your emotional leverage. Emotional leverage is invisible, but it's more dangerous than any financial leverage your broker can offer. It's what happens when your emotions stretch further than your account can handle. When you're confident, risk feels small, like a harmless breeze. But when you're fearful or uncertain, that same risk becomes a hurricane. The same 2% trade that felt like nothing yesterday can feel like life or death today. This emotional distortion is why traders violate rules they've memorized 100 times. They think they're managing money, but they're really managing themselves. That's why before every trade, you must perform what I call the risk sanity check. a mental audit designed to keep your emotional balance aligned with your financial risk. The question is simple but brutal. If I lose this trade, will my mindset remain stable? Don't rush past it. Don't answer intellectually. Feel it. Imagine the trade going wrong. Your entry gets stopped out, the chart reverses, your idea fails. Then ask yourself honestly, will I be calm, or will I spiral? Will I stay a rational operator, or become a revenge trader searching for redemption? The purpose of this question isn't to eliminate emotion. That's impossible. It's to calibrate it. You want to trade only when your emotional temperature matches your financial exposure. Think of it like this: every trader has a stress ceiling, just like a pilot has an altitude limit. A pilot doesn't climb higher than the aircraft's capability, no matter how clear the sky looks. They respect the machine's design limits because once they exceed it, small turbulence can turn fatal. Trading is the same. When your emotional leverage goes beyond your internal ceiling, even a tiny market move feels catastrophic. You start interpreting random noise as personal attack. You check your chart every 5 seconds. You lose perspective. That's not trading anymore. That's survival mode. This is why emotional neutrality is your most powerful form of edge. When you're neutral, you can see the market clearly. You're not praying, not hoping, not fighting yourself. You're just executing. Neutrality doesn't mean emotionless. It means emotionally balanced. You can care deeply about the outcome while still accepting whatever happens. The paradox is that the more detached you become from the outcome, the more consistent your outcomes become. Every top trader learns this truth the hard way. To achieve this state, you need a mental method that grounds you before entry. Here's how it works before taking a trade. Visualize both outcomes with equal acceptance, the win and the loss. See the loss happen first. Feel the discomfort. Accept it. Then visualize closing the platform, walking away, and feeling completely stable. You're reminding your subconscious, this risk is acceptable. I've already paid the emotional price. Only when that visualization feels neutral do you execute. This process creates emotional pre-acceptance, meaning the loss won't surprise your nervous system. You're removing emotional leverage before it can build. The best traders perform a verbal confirmation before they click the button. It's a simple pre-trade ritual, but it rewires your relationship with risk. Say it out loud. I fully accept the risk on this trade. If I lose, I remain stable, disciplined, and focused. This small statement acts as a psychological anchor. It signals to your brain that this decision is conscious, deliberate, and controlled. It prevents impulsive trading because you're taking ownership in advance. Many traders fail because they unconsciously resist risk. They place trades hoping not to face pain. But that hidden resistance multiplies fear when the market moves against them. By verbally accepting risk, you neutralize that resistance. Remember, emotional leverage is sneaky. It doesn't just appear when you're losing, it also builds when you're winning. Overconfidence is simply fear in disguise, the fear of missing out or losing momentum. That's why the risk sanity check must be applied not only before losses but also before streaks of success. After a few wins, stop and ask again, if I lose the next trade, will my mindset remain stable? If the honest answer is no, if you'd feel the need to protect profits or avoid pain, then your emotional leverage is already expanding. Step back, rebalance, neutralize. You can think of this process as an internal calibration system. Every trader has two accounts, one financial, one emotional. You must keep both funded. If you risk too much emotionally, your mental account goes into drawdown. And when that happens, you'll sabotage the financial one automatically. The emotional drawdown always precedes the financial one. Your mind starts craving certainty in an uncertain game. You tighten stops prematurely, exit too early, re-enter impulsively, and slowly lose faith in your own process. All of that starts from ignoring emotional leverage. So how do you keep your emotional risk in check? Start by assigning emotional dollar values to stress. For example, if a 100 loss feels neutral, but a 500 loss makes your pulse rise, your emotional risk limit might be somewhere between those two numbers. That's your emotional threshold. Trade below it, never above it. As your discipline and experience grow, your threshold expands naturally. It's like weightlifting. You don't start with 300 pounds. You start light, build muscle, then gradually increase load. Pushing beyond your emotional strength too early guarantees burnout. Also, recognize that emotional leverage compounds invisibly. If you've had a bad day, poor sleep, arguments, or general stress, your tolerance shrinks dramatically. A trade size that felt fine yesterday might overwhelm you today. That's why elite traders perform a quick psychological weather check before every session. They ask, what's my internal weather right now? If you're cloudy, emotionally charged, distracted, or tired, lower your size or skip the trade. Discipline is not just following rules, it's knowing when you're unfit to play. To make this a habit, ritualize it. Before every trade, go through these 4 quick steps. Pause, take 1 deep breath and reset focus. Visualize, see both outcomes, win and loss, and feel neutrality. Confirm, say your verbal statement of risk acceptance. Check, ask, if I lose this trade, will my mindset remain stable? Only when all 4 steps feel aligned should you enter. If any step feels off, if you feel rush, tension, or urgency, that's your cue to stop. The goal isn't perfection, it's awareness. The more you repeat this ritual, the more automatic emotional neutrality becomes. At its core, trading is not about predicting markets. It's about maintaining internal stability through uncertainty. Your risk sanity check is the firewall that protects that stability. It ensures that your next trade is always just a trade, not an identity test, not an ego rescue mission, not emotional revenge. Because the moment your emotional leverage exceeds your self-control, you stop being a trader and become a gambler chasing equilibrium. The professionals understand this truth deeply. They know that survival is the real victory. Every trade they take passes through the same mental gate. If I lose this trade, will my mindset remain stable? If the answer is yes, they proceed. If not, they wait. That's what separates disciplined operators from emotional speculators. So the next time you hover over the buy or sell button, remember the trade is never just about money. It's a test of your internal leverage, your ability to stay centered under pressure. Like a pilot who never flies beyond their stress ceiling, your job is not to prove courage but to maintain control. True mastery begins when you can face risk with complete emotional neutrality, calm, deliberate, unshaken. That's the foundation of all consistent trading. Every losing streak begins the same way, with a trader forgetting the bigger picture. One impulsive click, one emotionally charged decision, and suddenly they're inside a trade that has nothing to do with their plan. It feels logical in the moment, but later, looking back, it's painfully clear they weren't trading the market, they were trading their mood. That's why this step, the context awareness scan, is so critical. It forces you to pause, zoom out mentally, and ask the one question that separates disciplined execution from emotional reaction. Is this setup aligned with my plan or my emotion? Every trader has 2 internal voices. One speaks strategy, calm, deliberate, rational. The other speaks emotion, fast, impulsive, hungry for action. When you don't pause to check context, the emotional voice hijacks the system. You start seeing patterns that don't exist, signals that aren't really there. You're not reading charts anymore. You're projecting your state of mind onto them. This is why context awareness isn't just about the chart. It's about you within the chart. Think of trading like diving. Before a professional diver jumps, they don't just admire the water's surface. They check the depth. They understand the environment, the wind, the current, the rocks below. Because no matter how perfect the dive looks from above, one wrong assumption about depth can break everything. The same principle applies to your trades. Before diving into a position, check the depth of the market context. What's happening beneath the surface? Is this really a clean setup, or just emotional turbulence disguised as opportunity? The context awareness scan is your mental radar. It scans for 3 layers of danger: emotional context, market context, and situational context. 1. Emotional context. This is the hardest to see because it lives inside you. Are you trading out of boredom? Trying to make back a loss? Chasing the thrill of being right? These are emotional motives disguised as logic. Boredom trades usually happen when markets are slow. Your brain starts craving stimulation. Revenge trades happen when your ego feels bruised and wants redemption. Overconfidence trades happen after a win streak when you feel invincible. Each of these states blinds you to true context. That's why you must ask, what emotional need am I trying to satisfy with this trade? If the answer isn't, to follow my plan, then you're already off course. Emotional awareness isn't about suppressing feelings. It's about naming them before they manipulate you. When you can say, I feel revengeful, or I'm bored, you regain control. Awareness dissolves impulsiveness. The moment you label emotion, you neutralize its hidden power. That's what the context awareness scan begins with: emotional honesty. 2. Market context. Now zoom out from your feelings to the market itself. Ask, what's the market environment I'm trading in right now? Is volatility high or low? Are we in a trending or choppy phase? Are key news events pending that could invalidate your setup? Many traders take beautiful-looking setups in the wrong market context. A breakout in a dead session, a reversal right before a major news release, a pattern forming in thin liquidity hours. The setup may look perfect technically, but it's contextually weak. Professional traders constantly perform this scan. They think in layers: global sentiment, session behavior, correlated markets, time of day patterns. For example, a breakout at 3 a.m. in low-volume Asia might not mean the same thing as a breakout during New York Open. Context turns data into meaning. Without it, even a valid signal is just noise. So before you enter, pause and ask, if I zoom out, does this trade make sense in the bigger story of the market? 3. Situational context. This is about the world beyond charts. The external factors shaping your decisions. Are there major economic releases, speeches, or geopolitical tensions today? Did you just come from a stressful personal situation that might distort your focus? Are you tired, hungry, or distracted? Most traders think they can compartmentalize life and trading. They can't. A fight with a friend, lack of sleep, or caffeine overload subtly shifts your perception. Your brain starts to crave resolution, not accuracy. That's how situational noise becomes trading risk. The context awareness scan protects you from that hidden bleed through. When you combine all three, emotional, market, and situational context, you form a 360 of awareness shield. This shield doesn't eliminate losses, but it prevents stupid ones. It stops you from entering trades that should never have existed in the first place. Let's bring this to life. Imagine you've just taken a loss. Your system tells you to wait, but your ego whispers, you can get it back. Your chart shows a potential setup. Not perfect, but good enough. You're tempted. This is the moment to perform the scan. Pause and ask, is this setup aligned with my plan or my emotion? Then check the water depth. Are you reacting to pain or responding to structure? When you force yourself to ask that question out loud, something magical happens. You shift from impulse to awareness. You slow time down. Suddenly, the market's not chasing you anymore. You're observing it again. That one breath, that one question, can save an entire account over time. To make the scan practical, turn it into a pre-trade ritual, just like the risk sanity check. Before every trade, take 15 seconds to mentally step back and run through these quick filters. Emotional check. Am I calm, or am I seeking something emotional through this trade? A market check. Is this setup supported by higher time frame structure, volume, and volatility? Situational check. Is there any external factor, news, fatigue, distractions clouding my clarity? If all three answers come back clean, proceed. If any feel off, wait. The market will always give another opportunity, but your emotional capital is finite. Guard it. Context awareness also prevents overtrading, one of the deadliest habits in the game. Overtrading isn't caused by strategy flaws, it's caused by context blindness. When you lose perspective, you start forcing setups that aren't there. You try to extract meaning from noise. You enter trades just to feel in control. But markets reward patience, not participation. The context awareness scan teaches restraint by bringing you back to reality. You begin to see how few truly aligned setups actually exist, and that's a good thing. Because trading less, but with perfect alignment, beats trading more with emotional distortion every single time. There's another layer here too. The humility to admit when the market doesn't owe you action. Many traders subconsciously expect the market to cooperate with their schedule. They think, I'm here now, I want to trade, something must be setting up. That's emotional entitlement disguised as discipline. Context awareness breaks that illusion. It reminds you that your job is not to create opportunity, but to recognize it when it truly exists. So when in doubt, zoom out. Look at the chart from a wider lens, not just technically, but psychologically. Ask, would I still take this trade if I hadn't lost or won earlier today? That question alone filters out 70% of emotional trades, because most impulsive setups vanish when you strip away emotional residue. What remains is clarity, clean, deliberate, aligned action. The context awareness scan isn't flashy. It won't make your entries perfect or your timing supernatural, but it will make your decisions consistent. It gives you something most traders never develop: self-awareness in real time. That's the bridge between knowing what to do and actually doing it. In aviation, pilots perform pre-flight checks every single time, no matter how many flights they've done before. They inspect instruments, weather, altitude, and fuel, not because they doubt the plane, but because they respect uncertainty. Trading is no different. You must perform your mental pre-flight every time. Emotional, market, situational. That's your context awareness scan. So before you dive into your next trade, take that pause. Feel the urge to act, then step back and ask, is this setup aligned with my plan or my emotion? Look below the surface. Check the depth of the water. If it's shallow, don't dive, no matter how inviting it looks, because trading mastery isn't about how many times you jump in. It's about knowing when the depth is right. Awareness first, action second. That's how you trade with precision, not impulse. That's how you stay in the game long enough to win it. Every great performance, in trading, sports, or life, begins with alignment. When your emotions, beliefs, and intent are in sync, you operate with clarity and precision. When they're misaligned, even the best strategy collapses under pressure. In trading, this alignment is the final checkpoint, the invisible difference between confident execution and chaotic reaction. This step is your final pre-trade ritual, the state alignment ritual. It's where you bring everything together, your preparation, your plan, your psychology, and lock it into one coherent state of mind before you engage the market. Because let's be honest, most traders don't trade their system, they trade their state. A calm trader can follow any plan and make it work. A chaotic trader can destroy even the best plan ever written. That's why alignment is non-negotiable. It's the final mental calibration before every trade, the moment where you ensure that your inner world matches your trading intent. So what exactly does state alignment mean? It means your emotional state, how you feel, your belief systems, what you expect, and your intents, why you're taking the trade, are all moving in the same direction. If even one of these three is out of sync, you'll feel internal friction, hesitation, doubt, or impulsiveness. That's the market's way of telling you, you're not ready yet. Think of it like tuning a musical instrument. Even if one string is slightly off, the entire melody sounds wrong. Your trading state works the same way. The goal is to enter the market in harmony, emotionally calm, mentally focused, and spiritually committed. Because when your inner state is locked in, execution feels effortless. To achieve that alignment, use the state lock-in technique, a simple but powerful 3-step process that top performers across disciplines use before they perform. It takes less than 2 minutes, yet it can completely reset your trading psychology. Step 1: Deep breathing. Reset the nervous system. Before you click anything, sit back and take 3 slow, deliberate breaths. Inhale deeply through your nose for 4 seconds, hold for 4, exhale through your mouth for 6. Feel your heart rate slow down. Feel your shoulders drop. You're signaling to your brain, I'm in control. Most traders underestimate how much their physiology affects their decisions. A racing heartbeat and shallow breathing are the body's way of saying, danger. When you trade in that state, your brain literally narrows its perception. It focuses only on threats. You miss nuance. You react instead of responding. Breathing resets that. It brings you back to the present moment, the only place trading actually happens. Step 2: Statement of purpose. Anchor your intent. Now that you're calm, speak your purpose out loud. This is not superstition, it's cognitive anchoring. Words create mental structure. Your statement could be simple, like, I am here to execute my plan with focus and patience. My job is process, not prediction. Say it clearly, confidently. The act of verbalizing your intent reinforces discipline. It reminds your subconscious that you're not here to gamble, chase, or prove something. You're here to execute. Every professional athlete, soldier, or performer uses verbal anchors to prime their mindset before action. Traders should too, because without a clear why, your mind will unconsciously drift toward emotional needs. The need to be right, to recover losses, or to feel in control. The statement of purpose keeps you aligned with the only goal that matters: executing the plan. Step 3: Mini visualization. Pre-experience the trade. Close your eyes for 10 seconds and visualize the trade from start to finish. See yourself identifying the setup, entering calmly, managing rationally, and exiting with discipline. Win or lose. Feel the steadiness, the composure, the detachment. You're training your mind to experience success before it happens. Professional athletes do this before every event. A sprinter sees the perfect start before they touch the track. A golfer feels the perfect swing before they step up to the ball. A trader should see the perfect execution before clicking buy or sell. Visualization primes your nervous system. It builds familiarity. When the real trade unfolds, your brain recognizes the pattern and remains calm. But there's one critical rule: always visualize both outcomes, win and loss, with the same emotional neutrality. You're conditioning your brain to accept both as part of the game. That's how you eliminate emotional resistance. Remember, you can't control the market, but you can always control your internal alignment. When you've completed the state lock-in, you'll feel it, that calm, grounded readiness. You're not eager, not fearful, just clear. That's the zone traders talk about but rarely experience consistently. The more you practice this ritual, the more automatic it becomes. Eventually, the simple act of sitting down and breathing will trigger that state. Your mind and body will recognize it as trading mode. That's when your actions become effortless precision. But here's the truth: state alignment doesn't end at entry. It's something you maintain throughout the trade. If you notice your heart rate spike mid-trade, repeat the breathing. If you feel frustration rising, whisper your statement of purpose again. If uncertainty builds, visualize yourself closing the trade calmly. you're not just managing charts, you're managing internal energy. The aligned state is not a one-time switch, it's a continuous practice. Now, with all 5 steps complete, it's time to integrate everything into one clear pre-trade audit checklist. This checklist ensures that every trade you take passes through the same mental gate: objective, controlled, and aligned. The pre-trade audit checklist. 1. Emotional baseline. Am I emotionally clear? Check your internal weather. Are you calm, rested, and focused, or reactive, tired, or stressed? You trade your state, not your strategy. If emotions are unstable, do not trade. 2. Expectation filter. Am I projecting or observing? Make sure you're not forcing outcomes. Are you seeing what's actually on the chart or what you want to see? Expectation distorts perception. Neutralize bias before entry. 3. Risk sanity. If I lose this trade, will my mindset remain stable? Run your risk sanity check. Are you emotionally and financially comfortable with the loss? Trade only when you can stay neutral no matter the result. 4. Context awareness. Is this setup aligned with my plan or my emotion? Scan the environment: emotional, market, situational. Are you trading structure or impulse? Check the depth of the water before diving in. 5. State alignment. Am I locked into my optimal mental state? Run the state lock in ritual. Breathe. Declare your purpose. Visualize execution. Only trade when calm, deliberate, and aligned. When all 5 lights turn green, you're ready. That's your launch code. Your confirmation that everything inside you and around you is synchronized for peak performance. If even one light stays red, step back. No trade is worth breaking alignment for. Because trading isn't a game of prediction, it's a game of presence. The markets reward those who can act without emotional interference, and presence only emerges from alignment when belief, emotion, and intent move together as one. Remember this truth: every decision you make on the chart reflects the state you're in when you make it. If your mind is cluttered, your trades will be too. But when your mind is aligned, calm, confident, clear, your trading naturally mirrors that order. That's the essence of mastery. So as you sit before your next setup, don't just look at price action, look inward. Perform your pre-trade audit. Breathe, align, lock in your state, and when every part of you says yes, only then are you truly ready to trade. If there's one thing that separates those who drift in the markets from those who master them, it is not intelligence, not luck, not even strategy. It is routine. The Stoics knew this long before a single chart was drawn. Marcus Aurelius, emperor of Rome, surrounded by wars, betrayals, and chaos, lived by routines. Every morning he rose and reminded himself, people will frustrate me today, fate may humble me today, fortune may betray me today. And yet my power is not in avoiding these things but in how I respond to them. Every night, he returned to his journal, not to show off, not to publish, but to reflect, to record, to sharpen his soul. This was his ritual. His routine was not just habit, it was armor. And as traders, we too must build armor, because every trading day is a battle, not just against the market, but against our own impulses, fears, and emotions. A Stoic trading routine begins before the first candle of the day. It begins before you even touch the keyboard, before the charts flicker to life. It begins with reflection, a moment of stillness, where you remind yourself why you trade. You tell yourself, today I do not control the market, but I control myself. Today I do not control outcomes, but I control actions. Today I will act with discipline, with patience, with resilience. This is your morning ritual, your Stoic affirmation. Marcus Aurelius would write, today I shall meet with interference, ingratitude, insolence, disloyalty, ill will, and selfishness. He was preparing his mind. As a trader, your interference will come in the form of false signals. Your ingratitude will be the market not rewarding your patience. Your insolence will be losses that arrive even when you did everything right. Your disloyalty will be your own emotions trying to betray your plan. Your ill will be the crowd screaming at you to abandon reason. Your selfishness will be greed whispering to you to risk more than you should. You must prepare for them, just as Marcus did. Then comes the practical step, the morning risk plan. A Stoic trader does not sit down blind. They decide, before the market opens, how much they are willing to risk today. Not in vague terms, but in clear, cold numbers. They write, today, I will not risk more than X% of my account. Today, I will only trade setups that meet my checklist conditions. Today I will not take more than Y trades. Why? Because when the noise arrives, when the heat rises, when greed whispers and fear shouts, you cannot trust your future self to stay rational. You must lock the cage now, in the cool of the morning, before the lion of emotion wakes up. That is the essence of the Stoic morning ritual: reflection, affirmation, risk plan. Now the market opens. The storm begins. Screens flash, alerts ping, Twitter screams, and the chart dances like a wildfire. This is where most traders lose themselves. But the Stoic trader breathes. Literally, mindful breathing is not some mystical nonsense, it is the anchor of awareness. Epictetus said, "There is only one way to happiness, and that is to cease worrying about things which are beyond our power." When volatility hits, the breath is your reminder. I cannot control the candle, but I can control my inhale, my exhale, my decision. So you breathe, slowly, deeply. You bring yourself back into the present, away from the storm of imagination. And then you return to your checklist. The checklist is the sword and shield of the disciplined trader. It is the system that protects you from yourself. Every trade must pass through its gates. Does it meet condition 1?
Yes.
Condition 2? Yes. Risk aligned? Yes. If not, the door stays shut. You do not force it open. The market will tempt you, whispering that this time is different. But the Stoic trader remembers Marcus Aurelius' words. If it is not right, do not do it. And so they wait, they resist, they pass on the setups that fail the test, no matter how shiny they appear. And when a trade finally aligns, when all conditions are met, they enter calmly, not with hope, not with fear, with reason. They place the trade, set the stop, and let go. Because the outcome is not in their control. Only the action was. And then comes the hardest part, doing nothing. Sitting with the trade as it breathes, as it moves, as the crowd panics, as the alerts scream. Doing nothing is an art, and it is here that Stoic practice becomes invaluable. For the Stoics trained themselves to endure, to sit with discomfort, to remain still when the world around them shook. When a trade goes against you, your emotions will scream to interfere, to tweak, to move the stop, to close early. But the Stoic trader breathes again, remembers the plan and sits. When a trade goes in your favor, greed will scream to add more, to break the rules, to chase bigger profits. But the Stoic trader reminds themselves, profits are not mine until they are booked, and greed is the enemy of consistency. They stick to their plan. This is discipline in motion, built moment by moment, breath by breath. Finally, the day closes. The candles stop printing. The noise softens. For most traders, this is when they collapse, relieved, exhausted, often unaware of what they even did. But the Stoic trader knows the day is not over until reflection is done. Just as Marcus Aurelius wrote in his Meditations at night, reviewing his own behavior, holding himself accountable, so too must the trader journal. The journal is not about bragging rights. It is not about posting wins on social media. It is about truth. In the journal, the Stoic trader writes, what trades did I take? Which ones followed the rules? Which ones broke them? How did I feel during them? What emotions rose? What did I control today? What was outside my control? And what lesson will I carry into tomorrow? A Stoic trading journal might look like this: date, October 1st. Number of trades 3. Rule adherence 2 followed 1 broken. Emotions felt anxious during second trade, tempted to add size. Outcome, full 1.2R overall. Lesson, even small deviations from rules add unnecessary stress. Must breathe before entering. This is not numbers. This is philosophy. It is the daily sharpening of the soul through reflection. Marcus Aurelius did not write his Meditations for anyone else. He wrote them for himself, as reminders, as corrections, as affirmations. Your trading journal is your meditations. It is your dialogue with your own mind. It is your tool for mastery. Picture the visual: a calendar overlay on the screen. Morning ritual, reflection, affirmation. Risk plan. During trading, mindful breathing, checklist, discipline. Evening journaling, reflection, lesson learned. The cycle repeats day after day until it becomes second nature, until the noise loses its power, until the emotions lose their grip, until discipline becomes who you are, not what you force yourself to do. That is the Stoic trader's cycle. That is the path to mastery. And yes, it is boring. Yes, it is repetitive. Yes, it lacks the thrill of chasing every shiny move, the adrenaline of gambling. But that is precisely why it works. The crowd will always choose noise over silence, impulse over discipline, thrill over consistency, and the crowd will always lose. The Stoic trader chooses differently. They choose the slow grind, the patient routine, the disciplined reflection. And in doing so, they build something that no noise can break: resilience. Every day, Marcus Aurelius faced temptations, frustrations, obstacles. Every day, he returned to his practice. And every day, you will face the same in the markets. Losses will tempt you to quit. Wins will tempt you to get reckless. News will tempt you to abandon reason. But your routine, your ritual, will bring you back to stillness, back to discipline, back to the path of mastery. The market will never stop being chaotic, but you can stop being chaotic within it. The world will never stop screaming, but you can build silence inside yourself. The candles will always rise and fall, but you can stand steady, morning to evening, through ritual, through reflection, through journaling. That is your edge. That is Stoic trading. That is how you build not just profits but character. And in the end, it is character that outlasts markets. When you step back and look at everything we've covered, you start to realize something profound: trading is not really about the charts. It's not about the indicators. It's not about whether you caught the bottom tick or sold the exact top. It's about you. The battle has always been inside. The screen is just the battlefield, but the war is fought within the mind, and the trader who cannot govern himself will be governed by fear, greed, and chaos. That's why this journey into Stoicism hasn't just been about philosophy. It's been about survival. Survival in the markets, yes, but even more so survival in the storms of your own psychology. Because every candle on that chart is a test, every trade is a trial, and every outcome is an invitation. Will you respond with discipline, or will you collapse into reaction? The truth is simple, yet it cuts deep. The market does not reward emotion, it rewards discipline. It doesn't care about your hopes. It doesn't bend for your fears. It doesn't pause because you've had 3 losses in a row. The market is indifferent, just like nature itself, unmoved by your desires, unshaken by your pain. It simply is. And that is why the only edge you can ever fully own is your ability to master yourself. When you can walk into the chaos of price action with the calm of a stoic, you suddenly separate yourself from the crowd. The masses chase noise, but you stand still. The herd reacts in fear, but you remain grounded. The world screams for instant gratification, but you move with patience and discipline. That is the way of the stoic trader. Let's look back at what you've built. It began with the recognition that most traders lose not because of lack of knowledge, but because of lack of mastery over themselves. You saw how fear and greed, those twin tyrants, drag even the smartest minds into ruin. You heard the story of the trader who chased every move, who mistook activity for discipline, and paid the price with his entire account. And then, in contrast, you saw Marcus Aurelius, an emperor surrounded by chaos, betrayal, and pressure beyond imagination, yet sitting with a calm hand writing in his journal, mastering his own mind even when Rome itself seemed to burn. The lesson was clear: trading success does not come from predicting chaos, but from remaining steady within it. From there, we went back to the roots. Zeno, Seneca, Epictetus, Marcus Aurelius, the architects of Stoicism. They lived in worlds of uncertainty, collapse, and fortune's cruelty, yet they built a philosophy that made men unbreakable. Epictetus, born a slave, rose to become a teacher of freedom, not freedom of circumstance, but freedom of the soul. Seneca, advisor to emperors, reminded us that fortune gives and takes but cannot touch the mind of one who chooses to remain centered. Marcus Aurelius, the philosopher, king, left us words that still breathe strength into our modern chaos. You have power over your mind, not outside events. Realize this, and you will find strength. And in those ancient words, we found a mirror for our own trading screens. Their battles with fate became our battles with volatility. Their reflections in wax tablets became our trading journals. Their wisdom became our edge. But then we had to confront the enemy. And it was not the market, it was us. Revenge trading, over leverage, FOMO, paralysis after loss. The same mistakes repeated endlessly because we failed to realize that the dragon we were fighting was inside. The trader who hesitates after a loss, who freezes and lets opportunities slip, is not losing to the chart, he is losing to himself. The trader who takes one impulsive gamble after another, desperate to get it all back, is not trading against the market, he is trading against his own desperation. The Stoic response: step back, return to what is in your control. You cannot control outcomes, only actions. That became our compass. That became the foundation for building a pre-trade checklist, a ritual of grounding, a shield against the storm of impulse. And so we moved deeper into the Stoic principles themselves. Epictetus reminded us of the first truth: some things are in our control, some are not. That is the line every trader must etch into his mind. You can control your position size. You can control your stop loss. You can control your risk. You can control your journal. But you cannot control if the market gaps down. You cannot control if a black swan appears overnight. You cannot control what the crowd does. When you confuse these two circles, when you waste energy on the uncontrollable, you drain yourself, you burn out, you tilt. But when you protect your circle of control, you find strength. We saw this principle in action with the case study of the disciplined trader, who, while others blew up in a market crash, survived because his losses were small, calculated, contained. Just as a Stoic general loses a battle but preserves his army, he lived to fight another day. That is control. That is resilience. Then we faced the most dangerous opponent: emotions. Greed that makes you chase the high. Fear that forces you to sell the low. Imagination that multiplies suffering before reality even arrives. Seneca's timeless words, "We suffer more in imagination than in reality," rang truer than ever. Traders paralyze themselves not because the loss has come, but because they are living in the shadow of a future loss. They are playing against ghosts. But the Stoics gave us a weapon: negative visualization. Pre-meditation of loss. To rehearse the worst in your mind so that when it comes you are not broken, only prepared. If I lose this trade, what then? Ask it, answer it, accept it. And suddenly, ego is stripped away. Suddenly, a loss is just a number, not a wound to your identity. The Stoic trader can look at red on the screen and still write lessons in the journal, still breathe, still move forward. And then came discipline, the long-term strength that separates the wise from the impulsive. Marcus Aurelius said, "What stands in the way becomes the way." In the market, noise is the obstacle, Twitter hype, news flashes, the emotional roar of the crowd. But to the Stoic trader, that noise is not a barrier, it is fuel. Every distraction becomes a test of focus. Every temptation to chase becomes a chance to return to rules. The world chases waves, but the Stoic trader remains steady in his boat, guided by rules and principles. The case study of the investor who ignored hype and held to fundamentals reminded us that wealth is not built in seconds but in decades. And in trading, too, long-term systems, rule-based decisions, and patient execution will outlast every flash of noise. From there we built the routine, because philosophy without practice is dead. So we laid out the rituals of the Stoic trader, mornings of reflection, affirmations, and risk planning. Days filled with mindful breathing, sticking to the checklist, and resisting the trap of impulse. Evenings of journaling, not just recording numbers, but recording the mind. Wins and losses, yes, but more importantly, controllable and uncontrollable. Just as Marcus Aurelius wrote each night in Meditations, reflecting on his day and his soul, so must the trader reflect, not on whether he won or lost, but on whether he lived true to his principles. Because over time, those reflections become your greatest teacher. They reveal patterns in your behavior, blind spots in your psychology, and strengths in your discipline. They forge you into something unshakable. And now, here you stand, at the close of this journey, ready to ask yourself one final question: will you become the Stoic trader? Not the gambler, not the emotional reactor, not the victim of chaos, but the disciplined master of yourself. Will you build your circle of control and let go of what is beyond you? Will you rehearse loss so that it no longer owns you? Will you ignore the noise and stay true to your system? Will you write your reflections daily and shape your character trade by trade? Because this is the path. This is how you conquer the market. By first conquering yourself. Imagine it. Picture yourself 1 year from now. The markets are the same chaos they've always been. Gaps, spikes, crashes, rallies. Traders around you are still panicking, still chasing, still blowing up. But you are calm. You have a system. You follow your rules. You journal every night. You are disciplined. And because of that, while others burn out, you grow. Slowly, steadily, inevitably. That is what this path offers. Not overnight glory, but unshakable consistency. So here is your call to action: adopt the Stoic practice for 30 days. Just 30 days. Each morning, write down your reflections and your risk plan. Each trade, follow your checklist with discipline. Each evening, journal, not just what you did, but who you were. And at the end of those 30 days, look at yourself. You will see change. You will see strength. You will see a trader not tossed by every wave, but steady at the helm of his own ship. Because in the end, the greatest truth remains the simplest: he who masters himself, masters the market. And so I leave you with this voice, this vision, this challenge: the market is not your enemy. The market is your mirror, and the reflection it shows you, fearful or calm, reckless or disciplined, that is the trader you truly are. Choose now who you will be. Become the Stoic trader.